With Bitcoin trading sideways, who is secretly increasing their holdings? Premium turns red, the chain is running away. Is the second season of the bull market about to begin? From booming to capital transfusion, is Coinbase strategically ahead or self-destructing at a high position? 80,000 Bitcoins shipped from dark pool. Galaxy, how to become an institutional crypto central bank. Not following USDC, competing for trading volume. How USDC quietly thrives on enterprise services. Indonesia's crypto stance is ambiguous, despite saying it's banned, but secretly increasing its holdings.
Thursday, August 7th, BitcoinTV English channel. Where is the coin chain? I'm Michael, and here are the 24-hour headlines from the cryptocurrency world. Bitcoin's current on-chain funding is playing hard to get. The moon just broke 12. When the price was 10,000, the exchange suddenly opened its appetite and ate up the chips crazily, and it seemed that the classic big players ran away. Drama was about to be staged. However, as soon as the price stabilized, these coins slipped away from the exchange and moved to cold wallets. Now the price of the coin is 11.3 to 11.5. The market has flattened amidst a flurry of price action. Neither a panic sale nor a flood of deposits have occurred on-chain, clearly indicating that major players have collectively adopted a Buddhist hodling mode. While macroeconomic uncertainty has rattled the market, on-chain data reveals that true veteran holders are simply too lazy to move, even quietly transferring their holdings to their wallets. This isn't a precursor to a crash, but rather a mid-bull market reshuffle. As long as funds continue to flee exchanges, a second season of the bullish bull run is imminent. Don't be fooled by short-term volatility. The true whales are still hanging on. The Coinbase Premium Index has turned positive again, signaling a significant trend. After the Federal Reserve held interest rates steady last month, interest in Bitcoin among wealthy Americans, particularly institutions and high-net-worth individuals, has not only not cooled, but has rekindled. How can this be determined? When the price of a coin on Coinbase is higher than on Binance, it's likely the US is snatching up the currency. Furthermore, this indicator has remained stable in positive territory for 2 consecutive months, demonstrating that confidence remains strong even in a sideways market. On-chain data supports this trend, indicating that funds remain in place and positions remain. Everyone knows that in this environment of macroeconomic uncertainty, Bitcoin remains a reliable digital insurance policy. Market sentiment has seen a slight recovery recently. The CMC Fear and Greed Index rose to 54, slightly more greedy than yesterday's 52, but overall still tepid. Simply put, there's no panic, but there's no excitement either. A week ago, it reached 62, but is now slipping back down, suggesting that capital hasn't kept up. The market is moving sideways, and everyone is on the sidelines. Last year, the Greed Index reached 88, and in March of this year, the Fear Index fell to 15, now stuck right in between. This rebound is likely driven by short selling and on-market capital rotation. Without clear positive news or a surge in capital, sentiment could fluctuate at any time. Next, we'll have to see if it can break above 60, and then, combined with on-chain activity, will determine whether the market is about to get serious. Please like and follow us for the latest developments in the cryptocurrency, blockchain, and mining circles within the past 24 hours. Click the bell to join our channel and become a member, receiving your membership code Monday through Friday. Coinbase, riding the wave of Circle's IPO, saw its stock price soar to $444 in June, a record high. However, the good times didn't last long. The market was sullen upon the release of its financial report at the end of July. Trading revenue plummeted, with the main drivers of profit being the rise of Bitcoin and the hype surrounding Circle. While the EPS figure of 5.14 appeared promising, the market wasn't buying it, and the stock price plummeted 16.7% the next day. Coinbase then pulled another tack, announcing a $2 billion convertible bond issuance, citing corporate purposes. This maneuvering looked like robbing Peter to pay Paul.
There's a lot of momentum on market structure legislation as well that helps categorize which of these crypto assets are securities, commodities, payment tokens, or some other thing like artwork.
Commentary. Coinbase plans to issue $2 billion in convertible senior notes through a fundraising round, maturing in 2029 and 2032, with an option for an additional $300 million from initial investors. The bonds will be offered to institutional buyers under Rule 144A. According to the company's latest financial report, the company's 4 previously issued bonds had interest rates ranging from 0.55% to 3.77%. In the second quarter, Coinbase purchased an additional 2,509 bitcoins, bringing its total holdings to 11,776. However, the fundraising press release did not mention whether these funds were related to the purchases.
Coinbase, this wave of bond issuance is like walking on a tightrope. Just after the Q2 financial report revealed the embarrassing situation of poor trading business and relying entirely on cryptocurrency speculation to support the business, they immediately announced the issuance of 2 billion convertible bonds. Anyone with a discerning eye can see that this is not so much a strengthening of financial structure as it is an emergency transfusion after the sharp drop in trading revenue. They are taking advantage of the ultra-low interest rate of 0.55% to 3.77% to attract funds and accumulate ammunition for further increasing Bitcoin holdings. The market is naturally nervous when the leading platform issues bonds. As soon as the news came out, the stock price fell below 300. The US dollar plummeted in a single day 6%. As the most regular exchange in the United States, if Coinbase begins to shrink and defend itself, the signal it sends is not just that it is short of money, but that the entire compliant trading sector may be becoming more conservative. Galaxy Digital, a New York-based digital asset company, recently released its Q2 financial report, marking a turnaround. From suffering losses last year, it has transformed itself into a profitable crypto advisor. However, even before the report was released, the company had already established a significant presence within the cryptocurrency industry. It was helping a rumored ancient whale holding 80,000 bitcoins, valued at nearly $9 billion, to quietly sell them, while also assisting institutions like the Ethereum Reserve in their massive ETH purchases. This firm, which handles large Bitcoin and Ethereum orders from Wall Street giants like Goldman Sachs and State Street, is no wonder it's known as the finest institution in crypto. The question is, what's Galaxy Digital's magic formula that allows it to woo whales, banks, and institutions? And how did it transform from suffering losses last year to becoming the dominant cryptocurrency intermediary today?
Commentary. According to public data, Galaxy Digital currently manages $4.7 billion in assets, including $2.3 billion in collateralized assets, across 15 public blockchains and 15 cryptocurrency ETFs. In terms of strategic allocation, Galaxy significantly increased its Bitcoin holdings, adding 4,272 coins in the quarter, bringing its total holdings to 17,102, valued at approximately $1.8 billion. Its Ethereum holdings decreased from 155,000 to 90,500. Furthermore, to enhance the portfolio's resilience to volatility, Galaxy also significantly increased its holdings in Solana and SUI, demonstrating a multi-chain strategy and risk diversification.
Despite a 22% drop in overall trading volume, Galaxy Digital's financial report was quite impressive. The market department's gross profit was $55.4 million, a 28% increase from the previous quarter. The digital asset department also earned $71 million, a 10% increase from the previous quarter, representing a steady growth. Meanwhile, Strategy's Q2 revenue soared to $14.03 billion, a staggering 7,106.4% year-on-year increase. Tether, even more formidable, achieved a net profit of $4.9 billion in the first quarter, even holding $127 billion in U.S. Treasury bonds. Some of these companies have driven surges in book asset valuations, while others are desperately transforming amidst a cooling business. The industry is clearly shifting from a cryptocurrency-based business model to a financial package. These financial reports clearly signal a clear shift. Do you understand?
USDC takes 63% crypto salary market circle. Will this alternative breakthrough succeed? Indonesia's vice president secretly met with the Bitcoin company. Is he trying to emulate El Salvador and become a big currency holder?
Competing with Tether's USDT for trading volume. USDC says it won't compete with you. Circle's chosen market is relatively unpopular, but its strategy is clear. It's not jumping on the bandwagon, but rather focusing on satisfying real demand. They are developing USDC into an enterprise-grade stablecoin specifically for institutions. What does that mean? It means paying company salaries, handling B2B settlements, and developing financial infrastructure, not just rushing into exchanges for buying and selling. As early as March 2023, Circle partnered with ICE, the parent company of the New York Stock Exchange, to integrate USDC and tokenize funds in the global derivatives market. 2 months later, it applied directly to the Office of the Comptroller of the Currency for a federal trust bank charter, and indeed, they've made some progress. USDC is increasingly becoming the Swiss bank of stablecoins.
We're building many new products, kind of building more infrastructure that's necessary to get ready for large-scale internet companies, commerce firms, banks, building on this. We're building new products that really try to make this an easier to use technology for everyday payments. And
Commentary. According to a Pantera Capital report, the number of professionals choosing to receive their salaries in digital assets has tripled over the past year, with 9.6% currently using stablecoins. Circle's USDC holds a 63% market share, becoming the dominant payroll currency. The survey noted that mainstream payroll platforms such as Deal, Remote, and Rippling do not offer USDT as an option, making USDC more advantageous. Together, these two stablecoins account for over 90% of crypto-based salary payments. Furthermore, 88% of token-based compensation has a 4-year vesting period, up from 64% the previous year, indicating a market trend toward long-term incentives.
To succeed in the blockchain industry, it is not academic qualifications that count, but your on-chain on-chain practical ability. The latest data shows that the average annual salary for practitioners with a bachelor's degree is as high as $286,000, which is much higher than that of those with a master's degree and a master's degree. A PhD earning 226,000 yuan is being humiliated. Who dares to say, the more you study, the more you earn? This time, they've broken through the ranks of stablecoins by relying solely on payroll, not relying on trading volume to maintain their reputation, but rather on the unwavering strength of, I'm practical, I can pay salaries, I'm reliable. They've literally stamped the word stable into the wallets of crypto workers. This wave of manipulation serves as a wake-up call for the entire industry. Stop focusing solely on price fluctuations, market manipulation, and trending topics, and start thinking first about how to fill the wallets of workers. Crypto workers now need to rethink their thinking. Salary methods have changed, and career planning must adapt accordingly. It's no longer about academic credentials, but about wallet addresses and blockchain-connected capabilities. Those without practical skills and a strong on-chain presence will lose even their crypto livelihood. Indonesia is a country that is said to be tough on words when it comes to encryption, but it is actually quite honest. On the surface, it has always been quite conservative. As early as 2017, it banned the use of cryptocurrencies for payment, and in 2023, it was specifically emphasized that even tourists are not allowed to spend money, and you will be dealt with if you are found. But the reality is that the implementation is not that strict, and everyone knows it. After all, this is the fourth most populous country in the world, with 280 million people and a GDP of 1.4 trillion US dollars. Who wouldn't be tempted by this market size? As a result, you see, Indonesia began to quietly change its face. Not only did it introduce special exchange supervision rules, it also piloted the central bank digital currency in 2024. The pace of CBDCs has been accelerating recently, seemingly warming up for full crypto adoption. To put it bluntly, while they're saying stay away, they're actually ready to enter the market.
Commentary. According to digital asset platform Bitcoin Indonesia, the company was recently invited to the office of the Indonesian vice president to present a strategic report on the inclusion of Bitcoin in the National Reserve. The meeting focused on three core topics: the stability of Bitcoin as a sovereign reserve asset, the adaptability of the existing regulatory framework, and the potential impact on national financial security. Discussions also included whether Bitcoin mining could be included in national industry support programs, along with supporting public education initiatives. All these signs indicate that the Indonesian government is quietly moving towards a full embrace of crypto assets.
5 to 6 years ago, I learned about Bitcoin. It's part what I call digital disruption. It's a form of digital currency that can be used as a form of payment outside the control of individual institution, and I think it's very democratic. Yeah.
Indonesia has truly exemplified the saying, oppose with words but act honestly. As Southeast Asia's dominant power, the moment it said, how about Bitcoin be considered part of our national treasury, the entire market erupted in excitement. Chainalysis data showed a 37% surge in Southeast Asian Bitcoin trading volume within 24 hours, and activity on local Indonesian exchanges skyrocketed. Yet Indonesia's operations remain as illicit as ever, allowing transactions but not payments. While imposing taxes, it also wants to use Bitcoin as a national reserve and is exploring mining. This dynamic is like wanting to eat fish but avoiding the fishy smell, wanting to get rich but avoiding trouble. Discussions will continue until the end of September, and whether a decision will be reached will depend on how this Indonesian crypto suspense film unfolds.
Trump stirs up trouble again, raising tariffs on imported chips to 100%. TSMC and Apple have successfully dodged this by relying on their U.S. citizenship. Other manufacturers are left in tears. The supply chain is about to be disrupted again. The U.S. government is collectively AIING, and every civil servant has one ChatGPT Enterprise Edition. OpenAI this time we directly provide a customized package, which provides one-stop training plus office services and maximizes efficiency. Musk, the king of AI, will make another big move. Grok 2 will be open source next week. And Grok 4, is it outdated just after it was launched? Multimodal plus reasoning capabilities directly make it ChatGPT and Gemini shivering. India staged an encrypted version of Infernal Affairs. Cosplay police money laundering 260 billions. Law enforcement agencies took strong action, and Delhi and Noida closed the net simultaneously. Netizens gave 0 points for this acting skill. Tornado Cash founder Roman Storm is in big trouble this time. A New York jury found him guilty of operating an illegal internet cafe without a license, and he faces up to 5 years in prison. He has escaped the money laundering charge for the time being, but he may have to get 2 for 1 at the next court hearing.
Okay, that's the main content of today's program. Our channel focuses on valuable news in the cryptocurrency, blockchain, and mining circles, including news information and in-depth special reports. If you think our channel is valuable, you are welcome to forward and follow us. You can also become our member and receive the member wealth code from Monday to Friday. Let's get rich together and add a zero to our assets in the bull market. See you tomorrow.